I was actually comfortable paying $330 per share about a year ago, and now that it's only at $285, had to scoop it up. Well, I did it. Did something that I rarely ever do, which is invest in a totally new company, well, new to me, for my portfolio. You guys know that I'm huge on index funds and ETF investing, and you guys also know that I'm a professor, and so I'm very big on research and data. It takes a while for me to be convinced to actually put money somewhere when I know the stats that the S&P 500 is very hard to beat, and most people don't over the long term. But I've been watching this company for a long time, and I'm super excited that it finally hit a price that I feel comfortable with. And so I put about $10,000, or about 5% or so of my portfolio into Microsoft. Now, I know that's not the craziest bet in the whole world, but I do think some people are sleeping on this one, as it's been overshadowed by companies like Apple and Amazon and even Facebook. Today, Microsoft is at about $285 per share, which has decreased about 15% year to date. They have a net income in 2021 of $61.3 billion. They control 73% of the OS market, and 1 million companies use Office 365. That's 70% of Fortune 500 companies. Now, I have 5 big reasons why I picked this company and why I've added it to my portfolio, and I think this information is going to be a huge eye-opener for you guys. So why did I finally go all in on Microsoft? Well, reason number 1 is Bill Gates.
Haha, you're dumb. You don't even know that Bill Gates isn't a part of the company anymore.
Yep, that's exactly my point. Bill Gates built this thing into the powerhouse that it is, and most of the time a company is centered around its founder or its CEO. Since he stopped being CEO about 10 years ago, and since he left the board about 2 years ago, the fact that Microsoft is still crushing it and, in my opinion, on track to do even bigger things, this is a huge deal, because this means that the company is bigger than any one person or any one superstar personality like Tesla. Microsoft is actually up 330% over the last 5 years. The second big reason that I'm super hype on Microsoft is their partnerships and acquisitions. Everyone's heard about the big metaverse play that they're going for when they bought the video game publisher Activision Blizzard for $68 billion in cash. Microsoft said that the Activision purchase will accelerate the growth of its gaming business and provide building blocks for the metaverse. In my opinion, the metaverse is going to be huge over the next 5 to 10 years for sure, and in my opinion, I think that Microsoft is going to edge out Meta, and knowing that that's just a piece of what they're going to be doing through this company, I just think that this is going to be a very big deal. Other partnerships include with Qualcomm. They announced a partnership with Microsoft to develop lightweight augmented reality glasses, again for the metaverse and for their gaming play, but for so many other things that they can do with that. Microsoft's also deeply involved in the healthcare sector, and on March 4th, they completed their $19 billion acquisition of Nuance Communications, a leader in voice recognition software and conversational artificial intelligence. All these things that they're doing is next level, it's growth mindset, and I expect big things because of that. The next big reason that I picked Microsoft is one that originally got me interested in this company, and that's their AAA debt rating. This is only going to be known by nerds like me who like to geek out on actual figures and understanding the company, which all of you guys should be doing if you're investing. So this debt rating is issued by S&P or by Moody's, and AAA is literally the highest that you can go. As it stands, there's only 2 US corporations that have a AAA rating as of February 2020, and that would be Microsoft and Johnson & Johnson. Guys, Microsoft has a higher rating than the entire US government. This means that the chance of default by Microsoft is actually lower than the US government going into default. When a company is very good with debt, they have a very good balance sheet, they have enough cash on hand, it makes it very, very low risk as an investor. And with all these growth potentials that I just talked about and that I'm about to talk about, it just seems like a no-brainer. Number 4 is their cloud services. Now, Amazon was already a great company, but they became the exceptional company that we all know today when their cloud service took off huge. As of right now, Amazon is number 1 with a 33% market share in the cloud computing service arena, but Microsoft is number 2. They have a 22% share. As that continues to grow and as everything is going towards the cloud and even further than that to the blockchain, Microsoft is staying on trend, and they're more than just keeping up with the times, they are excelling with all this new technology. And then number 5, the reason that really prompted me to make it happen today was that it's on sale. As I said before, it's down 15% year to date. I was actually comfortable paying $330 per share about a year ago, and now that it's only at $285, had to scoop it up. Now, to be totally honest with you, the market is a little bit crazy, it's a little unpredictable, with companies like Netflix just dropping 35% in one day. So I do foresee a little bit of turbulence, a little bit of volatility, and Microsoft can go down a little bit from here. But overall, this company is going to go up, and I make my investments for 5 years, 10 years, 20 years. I'm not looking to sell anytime soon. I'm excited about my new position. I think you guys should definitely look a little deeper into this company. But why don't you guys share with me where you guys are at? What companies are you looking at? What's exciting to you? What have you added to your portfolio? That's it for today. Just wanted to give you that quick update, and I'm excited to share with you how it goes. Professor G, out.